Hi everyone, as price is now hitting some of our resistance areas as per the previous update where we were looking for price to move towards the upside, it's now a good idea to have a look at the chart again and see what's up from an Elliott Wave point of view. Starting with what you see on my chart, which is an impulsive structure, a 5-wave move, and after 5 waves we look for a retracement to the downside. Now this count might be slightly different compared to what you see elsewhere because of the beginning. Many people love to count this as a diagonal structure. However, if you would jump into the details of the Elliott Wave theory, then you will find that a diagonal is actually not a common structure. A multi-1-2 is a lot more common than a diagonal, and therefore a multi-1-2 will have a preference over a diagonal, which is the reason why I have a multi-1-2 now here at the beginning. The only way a diagonal will get higher probabilities is going to be in hindsight when you miss out on an extra 4 or 5. However, generally when you are starting to look for wave 4s and 5s, you are generally keeping an eye on take profits and getting out of positions instead of entering new positions. So by all means, even if this turns into a diagonal and you miss out on another 4 and another 5, you should already be solidly risk managed anyway. Another reason to not consider a diagonal over here is this range. After a diagonal, also again as per the theory, it is by far most common to see a deep retracement. Generally, a retracement after a diagonal moves back towards the origin. An ending diagonal would be retraced completely, while a leading diagonal preferably retraces to a 786 or a golden pocket retracement area, which is somewhere over here, which clearly we did not reach. Also, after a diagonal, the most common retracement pattern is a zigzag, a sharp and quick move towards the downside. But instead, this structure over here is a sideways structure in a flat. So these are a couple of things that make me look at a multi-1-2 first, but I do of course have the diagonal on my chart here with quite simply 1, 2, 3, 4, and now look for a wave 5, and then for a retracement to the downside. It just has lower probabilities compared to the multi-1-2 as per the reasons explained. Now, in a little bit more detail, this multi-1-2 is then counted as an impulse in a 1, a flat structure here in a wave W, followed by a zigzag X and a zigzag Y. So this is a sideways double combo. Your wave B retraced to the 0.9, a minimum target for a flat A, B, and then a wave C. And then wave Y is a zigzag, so flat in W, zigzag in Y, perfectly fine for a sideways double combo. Followed then by another wave 1 and a sideways wave 2, with this wave 2 retracing to the 382 Fibonacci, taken from the end of 2 to the high over here of this wave 1. And the 382 is generally a minimum target for a wave 2. It is very rare for a wave 2 to not at least touch the 0.382. Another reason to not really have a great preference for the diagonal is that if you would pull a fib from the low to the high here, then this wave 2 only retraced to a 0.236, not to the 0.382. So very, very shallow, while in this scenario we at least touch the 382, generally a minimum target. Now then we move towards the upside. We have our 1, 2, 3 triangle in 4 and 5. Triangle as per Stuba posted in Discord. I think it was a great idea here. A, B, C, D, and then a wave E. Finish 4, final move up. That's your 5 to finish 3, 4. And now look for, again, another 5 to the upside to finish 3. And look for one more 4, 5. And something that is interesting here as well is the volume, because you can see that at the moment price is moving up on a lower amount of volume, which is exactly what you like to see when you consider wave 5s compared to wave 3s. It is most common for a wave 3 to have the highest amount of volume, and once you start moving into wave 4s and wave 5s, you preferably see the volume decrease, and that is at the moment what we see here on multiple time frames. I'm currently on the 8 hour. If I go to a 4 hour, you see the same. Go to a daily over here, you can see the same. And even on a 1 hour time frame, even though it is relatively close, right? If we would take this peak here, then still you have a lower high. You can see here the horizontal line of my cursor. And if you would zoom in, this one is still lower. And of course, it's lower compared to this pivot there anyway. Now, that is a big difference compared to what we had in the past. So if we would compare this with a bit of historic price action, and this is the multi-1-2 here, 1-2, 1-2, 3 to the upside, right? From 39 all the way to the 70s, then what you can see here is after price broke out of the second range, so this is your first range, this is your second range here, you can see the volume increasing, right? So you have this move up, this is your volume, right? And this is the high in this area to the upside. And then you have the push out of this range immediately supported by a good amount of volume in this candle here, right? So you have a volume increase, which at that moment in time immediately gave us higher probabilities to look for a multi-1-2 and a 3 to the upside, followed then by a 4-5-4 and finally a 5. Because again, preferably a wave 3 has the highest amount of volume. So if price locally would continue to the upside and volume would increase compared to the move to the upside from the range here at 84 to 94, then yeah, we have to start considering a more bullish scenario, which is what you see here on my chart, which is the multi-1-2. Now again, you can have a couple of 1-2s in here, it doesn't matter. I didn't put this on my chart in detail. It's quite simply 1-2, and this range is another 1-2. So this is your first 2, this here is your second 2. You look for a 3, and then eventually 4-5-4-5, just like the move to the upside from 39 to like 73K. But preferably, what we like to see in this scenario is volume increasing, and at the moment that is not the case as per the previous scenario from 39 to 73, where we did have price moving up out of the second range, but volume actually increased compared to the previous move towards the upside. And that is at the moment a big difference on the chart. Now here again is the diagonal scenario, where you're basically not going to have another 4 and another 5. So here you have your diagonal 1, 2, 1, 2, 3, 4, 5, 4, 5. The main difference is another 4, 5, right? That's the difference between your multi-1-2 here in the beginning or the diagonal. But from a probability standpoint, pure per the Elliott Wave theory and all the details that it has and the guidelines, this scenario has a higher probability than any scenario beginning with a diagonal, at least any impulsive scenario, beginning with a diagonal over here. Only later, if you not get a 4 and another 5 is still, that's the moment a diagonal gets higher probabilities, but that's of course something that happens in hindsight, right? And then I like to shortly talk about the 886. So this is the 886 taken from the high to the low, and you can see the 886 here sitting at 105.3K. The moment the 886 is touched, probabilities immediately increase significantly for price to sooner or later take out the all-time high, which is important, of course, but something that you also tend to see with an 886 touch, which is very common, is a retracement to the downside. It is uncommon for price to just pump through an 886 without any reaction, go to the upside, and that is it. It is a lot more common for an 886 to be touched and then see a retracement to the downside. And generally the golden pocket is an interesting area, or even the 05. But be aware that we are close to an 886. It is also in confluence with the blue target box that I extended just a little bit, 104.6K to 106.2K, which includes the 886 among some other levels as well. So just be aware of this area on the chart. And if we then talk about the probabilities, then on an 8-hour chart, an impulse to the upside remains a higher probability scenario, preferably still looking for another 4 or 5. This wave 4 can then be formed during the weekend. It's almost weekend as well. We're now hitting some resistance areas, so possibly on Friday we move up a little bit more, reach like 105 or 140 resistance just above price. We are already here now testing resistances anyway, and there are a few levels just above where price is now, as you can see here, right? So we have a couple of levels quite condensed around 104 to then 105K now. Then we have 106 over here, and then 107, 109. But I mean, I keep an eye on the blue box first, let's say, right? So an impulse at the moment remains a higher probability scenario compared to the multi-1-2, which is most bullish. If, however, a volume is going to significantly increase and move beyond the volume of the previous move to the upside, so instead of this, we see this with regards to volume, right? Volume increasing, then we have to start considering a multi-1-2, just like we did from the movement of price from 39K to 73K. If you remember the analysis back in the day, then from an Elliott Wave point of view, the first thing as price is forming, you would first count this as a wave 1, 2, 3, 4. You look for a 5 and a retracement. However, the moment volume increased with the breakout here, the count changes to, hey, we got to be very aware of a 1, 2, 1, 2, and a 3, because most commonly a wave 3 has the highest amount of volume in an impulsive structure and not a wave 5. Now, at the moment, we do not see an increased amount of volume, but at least, as mentioned in this video, we are aware of the potential. And if it happens, we know what changes on the chart and how to approach it, right? Because then we have to start considering a multi-1-2. Now, trading-wise, not much has changed. Now reaching areas of resistance, which for me is take profit areas as per my own personal plan. I remain interested in shorts for the retracement. However, there is currently no sign of weakness, no big rejection, no bigger sideways range to analyze, no short, right? Therefore, we need a big rejection or a bigger range to consider it. Observe reactions at resistance level to level. So, of course, we are at resistance, but it doesn't mean that I just jump in a short against the trend. I am a very patient trader. For me to enter a potential short, I would need to see a bigger rejection, a retracement. This retracement needs to be corrective, preferably, of course, this move down impulsive. And then I'm interested to look for another move down to at least take out this low and potentially look for price to move further towards the downside. Locally, an important area of support, which I can imagine will be important during the weekend, might be this 101.1K daily naked point of control. If price is going to range during the weekend and we do not significantly move above this box, then we might get another 4. Remember, in the impulsive scenario, look for another 4 and another 5. We, in that case, might create another 4, touch the 886, move to the downside, a bit of a retracement, right? Bit of a range, blah, blah, blah. Then move up, touch the 886 again, grab the liquidity, create your 5, and then get a deeper retracement to the downside to lower levels. So just something I'm playing with in my mind because the weekend is coming and the volume is lower. So therefore, I am currently in my mind thinking about 4 5s instead of a multi-1-2 as the higher probability, and keeping those 4 5s in mind with the weekend coming as well, which generally creates a ranging sideways structure. I currently have something like this in my mind. From a trading perspective, again, I'm not really interested in shorting at the moment. I just need to see bigger rejections, and I always have a lot of patience. I don't care about sniping the high or the low, and neither should you if you don't have a significant data-driven plan that proves that in your plan, sniping highs or lows is actually a very good idea. So that being said, I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.